Good morning, ladies and gentlemen. I'm Madhuri, moderator for the conference call. Welcome to ONGC's earnings conference call for quarter and year ended on 31st March 2026. We have with us today Shri Arun Kumar Singh, Chairman and CEO, ONGC Group of Companies, Shri Rajarshi Gupta, MD, ONGC Videsh, Shri Manish Patil, Director, HR having Additional Charge Director, Finance, ONGC, Shri Anupam Agarwal, Director Finance, ONGC Videsh, and team who will interact with the investors and analysts to discuss Q4 earnings. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note, this conference is recorded. I would now like to hand over the floor to Shri Manish Patil for his opening remarks.
Good morning, ladies and gentlemen. I am Manish Patil, Director HR ONGC, having additional charge of Director Finance. I welcome you all to this ONGC earnings call for Q4 and financial year ended 2026. Thank you all for joining us on the call. As said earlier, we have with us Shri Arun Kumar Singh, Chairman and CEO, ONGC, Shri Rajarshi Gupta, MD, ONGC Videsh, Shri Anupam Agarwal, Director Finance, ONGC Videsh. Also present are my colleagues from ONGC, Shri Yogesh Nayak, CFO, Shri Ajay Kumar Singh, President Planning and Transformation, Shri Satish Kumar Dwivedi, Chief BD and JV, Shri Ravinder Singh Negi, Chief of Investor Relations, Shri Sanjay Kumar Sharma, Head Investor Relations, Shri Prakash Joshi from Investor Relations, and Shri Akhilesh Tiwari, Head Corporate Accounts. ONGC has compiled its financial results for the quarter and financial year ended 31st of March 2026, which have been audited by the statutory auditors. The financial results have already been released on 26th May 2026 through a press note and sent to the stock exchanges. This has also been sent to the analysts who are there on our mailing list. Here is a brief synopsis of the results. The company at the consolidated level has earned profit after tax of rupees 13,678 crores during Q4 FY26 against rupees 8,965 during Q4 FY25, which is up by 53%. There is also an increase of 30% in consolidated annual PAT, which is rupees 49,793 crores during FY26 as against rupees 38,329 crore during financial year 2025. This increase in consolidated PAT is mainly supported by performance of our subsidiaries HPCL, MRPL, OVL, and OPaL. Now coming to standalone financials, there is an uptick of 3% in PAT on quarter-on-quarter basis on account of improved crude realization and rupee depreciation. Company has earned profit after tax amounting to rupees 6650 crore for Q4 FY26 against rupees 6448 crore earning during Q4 2025. Annual PAT for FY 2026 stood at rupees 32894 crore against PAT of rupees 35610 crore for FY 25, impacted by lower per barrel realization of crude oil. Statutory levies have decreased by rupees 4820 crore, that is 15.6%, that is from rupees 30968 crore in FY 2025 to rupees 26148 crore in FY 2026, mainly due to lesser realization of crude and abolition of SAED with effect from 2/12/2024. There is an increase of rupees 3373 crore in other expenses during financial year 2026, that is rupees 28,104 crore in FY 2026 to rupees 24,731 crore in FY 26. This is on account of increase in provisions and write-off by rupees 1142 crore and increase in exchange loss by rupees 1932 crore. Provisions and write-off has increased mainly on account of one-off provisions in Q4 FY 2026. It includes provision of GST and royalty of rupees 235 crore, expenditure of rupees 262 crore related to KG 98/2, umbilical written offs as per opinion of ICAI, which was previously capitalized, provisions for old outstanding receivables of rupees 257 crore, provision for store and spares of rupees 280 crore. There is an increase in exchange loss by mainly on account of depreciation of INR versus US dollar by rupees 9 per US dollar, that is 11%, in financial year 2025 versus financial year 2026, and upward revaluation of foreign exchange liabilities. ONGC declared 3 hydrocarbon discoveries during financial year 2026 in its operated acreages. All the discoveries are in shallow water region of Mumbai offshore. 2 are new prospects and 1 is new pool discovery. The standalone crude oil production was 18.355 million metric tons during FY26, as against 18.558 million metric tons in FY 2025, and standalone natural gas production was 19.533 BCM in FY 2026 as against 19.654 BCM in FY 2025. While ONGC's production has remained broadly flat in recent years, the company has now taken a series of bold, structured and long-term initiatives to address exploration and production challenges. ONGC has entered into multiple new ventures and strategic partnerships for overall production growth, entering into new business verticals, expanding renewable footprint, and as a strategic enabler for strengthening our subsidiaries. The board has recommended final dividend of 20%, that is rupees 1 per share, with dividend payout ratio of 51%. The total dividend for financial year 25-26 would be 265%, that is rupees 13.25 per share of the face value rupees 5 each, with the highest ever total payout of rupees 16,669 crore. Friends, with this I finish my briefing of the results of the fourth quarter and financial year 25-26. Now I will request Shri Arun Kumar Singh, Chairman and CEO ONGC, to address the attendees to give you a detailed overview of the performance and future roadmap. Thank you.
Good morning, ladies and gentlemen. So it is a really great pleasure for me to interact with you. First, I'll give you broad, 30,000 feet view, and then we can take questions. First and foremost, if you take E&P side of ONGC, ONGC now is 2/3 E&P and 1/3 non-E&P at a group level. So 2/3 if you say E&P, which continues to be the main thrust. The 2-3 macro trends, if you see, is basically first one is that you might have heard that there is a great push towards exploration, and government is seriously considering to fund particularly deep water exploration, which we were doing so far at our cost, but of course size was small. So now deep water exploration is coming in focus from government side. Second, if you see at policy level, which is a macro level, if you can read the pattern of time, government reduced royalty from our onshore productions, and basically these all royalty, post wellhead, all that in the direction of promoting E&P in the country. In fact, taking a hit on government-owned revenue and literally giving that money to you for increasing production or doing more exploration. So that intent, plus also you must have noticed that unlike previous decade, this time when the oil hit $150, still SAED did not come. So we thank government for that, because whatever market price is there, ONGC is able to realize that. So in fact, ONGC now is you can say safely that other than the APM gas, government is not controlling any of our revenue stream. It is purely left to ONGC to manage this revenue stream, be it production or be it the price. Only area where government is involved today is APM gas. First and foremost, we want you to know that ONGC produces today and sells more gas than oil. In fact, gas is now little more than oil. And gas side, if you see now, we are flat in new well gas, which was last year was around, volume-wise it was 17 and revenue-wise 21. This year, we can safely, you can do your own number crunching. There is a big jump in new well gas. Already from 1st April it is 9 MMSCM plus. You can expect another 3 very easily because our new project is new well gas only. So it becomes 12. 12 out of, say, whatever we sell, so 25% of our gas has become new well gas. New well gas, if you notice, we get 12% of crude. So virtually this is international price. In fact, world over, local market, I don't think there is any market in the world which pays more than 12% of oil price. LNG is different because LNG liquefaction and all that costs, but probably India is the highest paying, for new wells. India is the highest paying market in any onshore thing. That also goes to prove that government intention is to leave more money with E&P operators to do further production and exploration. Now, bigger story therefore in our basket today is that gas, new well gas will be always on rise. Now, from 17%, this is already jumped. I think it will be at 30%. As time will tell. But ultimately, because there is some margin we have to take for what happens, but literally it will be between 25 to 30% anywhere this year. And next year it will be again 30 to 35, 34%, 36%. Every year, because as you know, why I'll explain you this, why new well gas is on rise. That doesn't mean that gas production is in the same ratio rise. Because gas is shifting because our old wells are dying and nearby will drill new wells to produce same gas or more gas. And therefore, the $7 gas is gradually getting replaced by 12% gas. So that is only a matter of time before 4, 5, 6 years max, even if the government policy doesn't change, if the same policy continues, when almost 80-90% of ONGC gas will be new well gas. So this is something that you can factor in your calculation, that new well gas, what price, at crude price of say $90, we get 10.8. 10.8 in the local market is we value it more than oil, to be very frank with you, because for different reasons that we cannot share with you, but our gas is not as cumbersome as oil. So that's it. So it leaves more money in our pocket. So that is, so far the gas part is concerned. Third part, India is oil may be flat, but gas, because unless we get some major discovery, gas will keep growing. Like for example, this year itself, we have started opening the wells. Out of 15 wells, we have already opened 4 wells for a DUDP project, which is supposed to give 4.89 MMSCM gas. Progressively we do it because, one by one to balance the system. So if you take that quantity of, say, 4, so 4 on total our gas sales is today, say, production is around 53, 54. So even production-wise, it is, and these are all neat sales gas. So what I'm trying to tell you that every year, 7 to 8% increase you should expect in gas. Because this year is DUDP, next year is DSF. DSF is also again 4 to 5 MMSCM gas. Plus also we are hopeful to open complete 98/2 gas wells, because wells are complete now, platforms are complete. Often we told you that project was inordinately delayed for geopolitical and because all the vendors were foreign based. Now we are hopeful that now last leg we are doing a piping connection, which is internal to our work. So July, August will open those wells too. So you can safely assume that our gas production will be up and compared to last year. And next year also gas production is up on account of, so it is not only for us, it could be true for other operators too. So gas production, and gas is becoming more attractive because of the price that Indian market pays for gas. So this is something that I wanted to tell you. Then fourth thing is important is that we roughly drill around 500 wells. 500 wells, 100 wells are exploratory wells and around 400 are producing wells. This year also we are increasing little more. 50 to 60 wells or little more than that we may drill more. So for the reason to basically augment or support our production base. But at the same time you should be mindful that in this business, old field depletes, pressure goes down, and therefore every time we have to search for new. Fortunately for last year, our reserve replacement ratio in 25-26 is more than 1.1. It is 1.15 or something like that. 1.17. It means we found new oil and gas equal to what we sold. So it means R by P ratio almost remains at the same level. The reserve to production ratio, 2P reserve is around 700 plus, which is almost 2-3 million ton less or more compared to last year. So futuristically these are relevant for you. So I thought I'll give that information to you. Now coming to our bigger commitments. Bigger commitments are this year. One thing you must know that I want you to know that we are today executing almost around 33,000 crores of project in Western Offshore. That is currently work is going on. That is total project value is 33,000 crores. These all are there to either sustain production or increase production. So you can draw your own numbers that how much will contribute into increased production. So that is something that we want you to know. Plus also we have this year also we are in the process of that we'll share with you at a opportune point in time that how much we are doing new projects. So basically that part, and then one more thing we want you to know that global outlook you observe better than us. Global outlook of oil price is certainly for next 2 years is better than what it was previous 2 years. So you have to draw your own inference to see that where ONGC will be. This is by and large I've shared the ONGC picture of the price. One thing which is we really are very proud that for Western Offshore, which is roughly our 60% of oil and 70% of our gas comes from Western Offshore. So Western Offshore is our lifeline. You may be aware that we gave BP TSP contract for Mumbai High. Mumbai High was only 38% of total Western Offshore. And day before yesterday, we awarded TSP2 for remaining 62% of Western Offshore. So now 100% of Western Offshore is with BP as TSP. So, and we shared with you the number that on the baseline number, BP showed a good result, although in our industry, even the, leaf doesn't move for less than two years. So anything we do, it takes time in E&P industry. But first year itself, they showed some operational changes here and there, and we could see some result. Now the big things are under execution. Big things means capex projects, mainly the water injection wells, producers. What was the group work means our TSP team did? That work we are under execution. This year we will execute 40%, and next year we will execute the 60% of recommendation. And remaining, which were just now awarded, I hope that next year will come for execution and for remaining 62% of the field. So TSP, we are betting big on TSP with BP, and at least initial shoots prove the line of thinking was right, because that too in a very short span of time. Last year April they came. So we are very hopeful about outcome from that. Now, one more thing we want to share with you is 98 bar 2 I shared with you gas, but I'll be very honest to say that we had some geological surprises in production in 98 bar 2 oil, but we have almost got full handle on it, and we know what to do now. So what to do now in terms of sustaining the production. So this is something that we should. We yesterday in our press release also we mentioned, but gas wells will open, and now we have best international experts to suggest us that what to do best in 98 bar 2. These are small interventions that we need to do, and that we will do in the short source of time. So this is something about E&P. Now coming to OVL, our subsidiaries, and our other activities. The first thing you may be aware, we are back in Sakhalin, and Sakhalin is full blast. Russia is producing almost what it was producing pre-Ukraine. Sakhalin is at the same level. So you can draw your own inference what kind of thing it will do to ONGC group, because Sakhalin is our numero uno asset in the cap of OVL. Second good news of company is that Mozambique project is progressing very fast. There are 6,000 persons on the site doing project. We hope that if everything goes well, 28 end or something, we should have our LNG. So this is something that is happening good on the front of OVL. Rest, third thing which is also important is Venezuela. We are very hopeful that Venezuela we are producing something currently, but now in the new regime of American new regime, we are hopeful that our production will go up substantively after we get the license in the new regime, that is the US regime and all that. And hopefully Venezuela also will start showing good number of production in years to come. So this is something that on OVL side. OPaL side, we had promised that we will turn it around. We almost turned it around, because last year if we had some small issue, otherwise our EBITDA was 1,500 crore, but we achieved 1,206 crore. But there was some last month March issue came, and when the petrochemical industry we had to shut for the want of gas, because gas got diverted, some gas got diverted to LPG and all that. So otherwise we were there, what we had promised, that 1,500 crore will be our EBITDA of OPaL. And let's hope that next year, that is this year, it achieves again, our internal target is 1,500 to 2,000 crore. It achieves EBITDA of that 2,000 crore. Now we want to share with you that something that is in last 4 or 5 years, you must have observed us that we have been very bullish on OGL, ONGC Green Limited. ONGC Green Limited is having 2-3 mega. One is 100% subsidiary called, which we acquired from PTC, and the other one which we acquired with NTPC. That INA is now 3,000 megawatt plus, and hopefully it will add another 1,000 megawatt in this year. So there we are almost with our own production, what we had. So we have become now, we can say that now we are almost close to 3 gigawatt by next year in terms of our renewable portfolio. And also, it's turning out to be a good asset because it has old PPAs and all that, as you are aware. So it is something that, that renewable side, that is our flagship. Cost reduction side I want to talk about, because cost reduction side we had promised 5,000 crore. We almost got 4,000 crore, but you will say that where is that money gone? So money has gone in terms of GST went up in oil and gas from for input 12 to 18%, That itself wiped out 2,000 crore for us per year. I'm saying everything put together. And then second issue came is this dollar conversion, this rupee depreciation. So this ate away all that 5,000, 4,000 crore we saved. But we are on course to save 10,000 crore. I've told you that hopefully another 4,000 crore will come our kitty with host of effort, which is already in place. Now shipping side, as you are aware, we have formed a JV with Mitsui. We have ordered 2 ships for a very large tank carrier for our Opal. So shipping side, that is something that is other activity. Now Petchem, we have that also we have shared with you in the stock exchange filings that we have approved the creation of a JV between MRPL and Opal to have better synergy in Petchem marketing. So these are 2 our companies and 2 having independent everything. So we are basically amalgamating the marketing part so that there is one umbrella brand under which the product gets marketed. So this is something that the board has approved. It is now in the final stages of other statutory requirements. So hopefully there also some value should get created. Yesterday in our board we approved a port business. We yesterday approved the formation of a new JV with the Gujarat Maritime Board to create a new port at Dahej. I want you to know that Dahej is the least distance port from northern denser population part of the country. So naturally anything to land at Dahej is cheapest for the country in terms of transportation, further transportation. But Dahej, you know that Dahej also is nearest for the LPG pipeline, that is 8 million ton Kandla-Gorakhpur pipeline. Plus this port will serve our own interest of this Opal plus LPG. So it is from day one, it should be a very, very highly financially viable and commercially profitable venture. It's 50-50 JV between us and Gujarat Maritime Board. So this is something that, so if you notice, 5-6 new JVs have come in recent times, basically, increasing our chances of other revenue streams, and including renewable, but basically in the all energy space. It is not that we are, and plus integrated to our own line of business. Like shipping, what we did is for our own shipping and transportation from US for our own plant. So now coming to, I think I'm done with most of the things, except unless you did I miss anything? No. Huh? So this is the macro picture now. Now we want you to know that that gas is more lucrative for us today. In Indian context, gas is more lucrative. So we should call ourselves gas and oil company, not oil and gas company. And also, no, whatever new gas comes, these are all, even from APM block, like DSF is free pricing. DSF, which will come next year, is market price. It is not even governed by 12% slope. So 12% slope is only for nomination field, and any well, like this project of DUDP is in the nomination block, and therefore entire production is going to the new well gas. New well gas is 12% of crude price. So this you want you to be mindful, and therefore ONGC gradually is becoming more greener company through more gas. So so now that is also a strategic pitch for the world, that possibly only one oil and gas company in the world which produces little more gas than the oil. So this is something that, as you know, oil production of the world is around 4,000 million ton, 4,400, and gas production is 2,500. But we are almost matching. Oil and gas is equal, and gas is little more than that. So it is something, and gas is more valued fuel in the light of what goes on in fact. In fact, you must be checking the market. In India, gas demand is galloping. Maruti alone is selling roughly 25% of its vehicle is a CNG vehicle. So car manufacturing. So because CNG is a natural and CNG demand is viable at 12% price. So naturally it is more greener and it is also gas we can produce more and more. That confidence we have. So oil, I'm not saying we can't produce, but oil growth in our view will be, unless we have some big discovery, will be muted. But gas growth will continue to be. So this impression that ONGC will not grow is not correct. So we'll grow more on gas side. So that factor you should keep in mind. So with this, I'm done. Now you can take questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. The first question comes from Nitin Tiwari from Phillip Capital Limited. Please go ahead.
For having this call. Really appreciate the elaborate initial brief that you gave. Gives a very clear picture. So my question was with respect to gas production. The first question is with respect to gas production. So as you mentioned, your incremental focus is on gas and you spoke at some length about it. But what I wanted to point out is that surprisingly over the last 5 years, our gas production is on a continuous decline. Despite whatever investments that we have been doing and despite the guidance as well. So if I remember right, our earlier guidance during this year was that by January, the technical partnership with BP would start showing some result, and we'll also have incremental gas coming in from Daman offshore as well as other fields in the western offshore, which will contribute about 5 MMSCMD by end of March. So I just want to understand what is the status of these projects. Was there any incremental production that came in, and the decline that we saw in this quarter was despite this production coming in? And in that backdrop, what is the guidance for FY27 and FY28 for gas production for us and also for the JV? So that would be my first question, sir.
So BP in the MH field, that is Mumbai High, that is TSP1. Their oil is on baseline target, oil is 102%. We have disclosed that yesterday. And gas is around 108 or 109%. So gas for the BP has gone up. But as I told you, oil and gas production, there is some small operational part and there is largely facility part. Facility part is coming up. So it is first year itself, MH has shown a number. But first year was never supposed to be a great number because facility laying will take around a minimum 1.5 years to go. So that is, but still where BP is involved, the production is more compared to what we have targeted. Now coming to DUDP, yes. In March, DUDP we were targeting March. And March we have started opening the wells. But try to understand that it is not like, something that you start today, everything you open in one day. We go through a process. So there are 15 wells and all the 4 platforms are fully ready to receive gas. We are opening gas, 4 we have opened and we have to remaining 11 we have to open. So whatever we had committed to you, we will start monetization from March. I think we have honored that. Okay. Now, monetization commencement doesn't mean that full thing coming on in one day. It is a startup plan which takes around 6 to 7 months, and that process we have to go through. So in this monsoon, we hope to open at least another 6 to 7 wells. So now, for monsoon is starting now. So 5th well is under opening now. Then 6th will come, then 7th will come, 8th will come. There is a process and sequence to be followed for gas production. And because you have to synchronize with, the pressure balancing you have to do. the well doesn't get over pressurized and all that. So there are technical issues there. So we are sticking to that plan that monetization commenced in March. Hopefully by September, October, we should have opened all the wells. But again, I just want to tell you, peak production doesn't mean that after you have opened all the wells that peak production happens. Peak production happens on the reservoir maturity. So after pushing some gas out and all that, then again interventions are made, and therefore peak production may be little further away. But all the wells we are hoping to open by just after monsoon. It should be completed after monsoon. That September, October, we should be through with all the wells opening. And opening should give us around 3 to 4 MMSCM per day. So, did I answer your both questions?
Yes, sir. I mean, you did answer to some extent. I also wanted to have the guidance for 27 and 28, and I do appreciate the complexities in these projects, sir, and really appreciate the good job that ONGC is doing. But I was only going by the guidance that you all gave, I mean, at the beginning of FY26.
I'll tell you. I'll tell you. We gave a hint in yesterday report you gave. I have read it, though I didn't write. People have written it well. They have said very clearly that the Gulf War, March, many projects got delayed because of the Gulf War. One of our major pipeline replacement project was by a Saudi or Dubai. So naturally that project, got kicked because of the Western Asia issue. In fact, geopolitical issues, then similarly, there is some project which got linked to material availability and all that. That was also because of somebody is not getting energy, so everybody asked for deferment of time. But still, you should appreciate that fortunately, DUDP were chasing very badly, so we got on time. But other projects, little delay here and there, and also we should be mindful. Then we connect the new projects with the old wells. We have to. There is a process to be followed in which the certain portion of time the production suffers, because it is a partial shut-off or major full shut-off, so that, we can do the activity. So some part you can attribute to that. But if you see last year, ONGC standalone gas production, it is almost flat. It is not 0.6% negative only, if I remember correctly. If you are hinting at our JV partner, that is Vedanta and all that, that figure I can't talk. But ONGC is standalone, pure standalone, means ONGC operated blocks. Not ONGC jointly on blocks operated by someone else. We are almost oil may be -1% and gas we are 0.6%. So almost we are flat level. And DUDP one number was supposed to come from April only. Yeah.
So I was referring to average production as well as the quarterly production. So in this quarter, if we look at it, our gas production is down by 2.5%.
I gave you the reason. The projects are under commissioning. Many things, as I told you, wells are under, opening and all that. So we have to shut other wells to gradually open these wells. Anyway, these are technical things which need not, worry. But whenever you commission something new, there will be temporary blip. Okay. So this is something. This quarter is primarily attributable to that blip, 2% minus.
So pardon me if I can cross-check somewhat, I don't know, but I'm trying to put it as mildly as possible. But if you look at, even KG 98/2, the project is not delayed. It's severely delayed. We have been guiding in almost every quarter. Yes.
First of all, 98/2, we gave you a hint that we had a geological production. Right? Gas wells are yet to be opened because gas wells we could not open because platform was not ready. So platform got ready and platform got ready, and then now connections are going on. So hopefully we are hoping that July, August May we'll open those wells.
Great, sir. I just wanted to have the guidance therefore for 27 and 28. In light of what you spoke about opening of wells in.
We can't give you exact numbers. Okay, that you have to speculate.
Okay.
We can't give you, because unfortunately we give you a number and they will cling on, and then you ultimately blame us. We are in E&P. It is called exploration and production. It is always
no, sir. We are not going to hold you on to any specific number. If you can help us with some broad guidance, that will be helpful, sir.
Broad guidance I gave you. It will grow. Gas will grow. Mrityunjay, let us now ask
some other questions to come up. Okay.
Sure. Second question is a bookkeeping one, sir.
You can join the queue later. Yeah. Okay, Nitin.
Sir,
Thank you.
Thank you, sir. Participants are requested to ask 2 questions in the initial round and may join the queue for more questions. The next question comes from Pranita Shetty from Morgan Stanley. Please go ahead.
Hello, sir. Can you hear me?
Yeah.
So thank you for this opportunity. Really appreciate the detailed brief you gave earlier. It adds a lot of light to what we're trying to understand about the company. So I had 2 questions. The first one is relating to discoveries. Could you throw some additional light on the discoveries, what you mentioned earlier, the 3 discoveries in the brief, what you had mentioned? Could you just add more clarity in terms of what is the production that potential production you're seeing there, and what could be the capex for these assets?
So these are under appraisal. Okay. All I can say that the wells discovery flow rate was to my mind for Western Offshore was fantastic, because the 3 discovery that I have quoted you yesterday, 2 in Western Offshore and 1 in Assam. Both the discovery is a fantastic flow rate it has shown. Only thing is, unless we put some more wells nearby and assess the reserve size, we can't give you a definitive figure how much it will produce. But we are now very bullish on these 2 discoveries, because it is completely a different area. It is and frankly we were not expecting this flow rate. So naturally, but we can't tell you the quantity, because unless we have one or 2 more exploratory wells, appraisal wells. In our industry, we appraise, discovery is made. Then after discovery, then you appraise by drilling some more wells to delineate the area. And then you assess the quantity. Once you assess the quantity, then you develop the field development plan. So then you decide the capex. But all I can say at this point in time, by Western Offshore standards, it looks very, very promising. But quantity I will stay away from, because that is not correct on my part to say without appraisal.
Sir, then you'll be adding, let's say, another 3 exploratory wells there, and then giving us a more detailed
number I will give you then. We are sure that it is worth developing. I can make that statement. But what is the reserve size and what will be the facility size, we'll come to know only once we have the appraisal done. Appraisal done means 1 or 2 more wells. And that is already under plan. So it must be happening now.
Okay, so thank you.
Thank you, ma'am. The next question comes from Randy Lau from Goldman Sachs. Please go ahead.
Hi, am I audible?
Yeah, you are.
Yes, you are audible.
Yeah.
Okay. Thanks for taking my questions. I have 2 questions today. So for my first question, could you share some thoughts on why the government has not implemented any windfall taxes recently in spite of higher oil prices, and whether there's any expectation of such going forward? This is my first question.
Yeah, this should ask government, not me. But see, we are damned either side. Then also you are damned. Last time SAD government applied, everybody said the government is interfering too much. This time government has not applied. Then also you are not happy. But it is good for ONGC, because even when the crude price went up to 140, what you can infer from here, I think I would imply to infer you that way, that government doesn't want to interfere with the E&P sector. It wants to give full freedom to whatever, because our report dependence. They want every drop to come out, and whatever they can do, they have done. In fact, that not as saying because government has appointed me, but because I'm saying because they didn't apply SAD despite so much of crisis and so much of loss to ONGCs. Otherwise, we were the first fall guy to compensate partly by giving SAD either through exposure, or even earlier times we have given discount up to 2 lakh crore in the previous time when 13-14. that, it was SAD, government didn't collect, but we directly gave the discount to our crude purchasers in India. So this time nothing like that happened. We got flat Brent. Even when it was $140, we also got $140. So you should be happy, no, as a ONGC investor.
Yeah, thank you, sir. Okay, so for my second question, what is the latest status of the proposed APM gas price deregulation from January 2027?
Pricing regulation, as of now, I can't say about government. Government for this year, because it is supposed to be reviewed this year, because it is Tariq committee had asked for review in 27. But in a way, whether that review is required or not, that is $1 million question, because we have already reached $7, and $7 gas is our kitty next year will be, out of total gas will not be more than 50%. So if they review, well and good. If they don't review also, we have new well gas. The new well gas will keep replacing old well gas. And so therefore this journey of 10 to 12% migration each year will happen. So I think if they can revise it right now, we'll be more than happy. But actually directionally it is clear that government wants to compensate very handsomely to gas producers. Because I can't say on behalf of government that what government will do.
Thank you, sir. The next question comes from Varadarajan Shivashankaran from Antique Stock Broking. Please go ahead.
Thanks for the opportunity, sir. We are all quite enthused by the government support in the form of a relief on the royalty front. Is there also a plan from our side in terms of increasing exploration as well as development capex given this backdrop?
So that is a little premature, but intention, at least what we understand from various sources, that intention, of course, it is for government to take a call finally, that how much they will support, but it looks like there is a big support for, exploration and production coming from union budget.
Are we looking at increasing our capex, sir? From that point of view, now that we have some
capex, that depends on what contribution gets announced from there. We'll adjust our figure accordingly so that we continue to give you handsome dividend.
Very nice. Secondly, in the case of discoveries and the new reserve replacement ratio, you have given the 2P reserves. Unfortunately, we don't have the baseline 2P reserves for the entire company to compare ourselves with. So if you can provide that would be useful, with oil and gas.
So that we'll give. Subsequently, we'll give you. Subsequently, after this call, we'll share with you.
Sure, sir. Thank you.
Because that baseline last year addition is 44. In fact, this year addition, 25-26 addition is 44 million ton. We produced roughly 40 million ton of oil and gas. So 4 is additional. So you should be happy about last year's performance. Base year will be the previous year performance. So, and God has not given a size in the back.
Thank you, sir. The next question.
We'll share with you. We'll share with you. This nonetheless we'll share with you. Yeah.
The next question comes from Amit Muraka from MOSL Financial Services. Please go ahead.
Yeah, hi. This is Amit from ISIS Capital. On capex, could you give a number as to what can we expect for FY27?
See, it remains generally 30 bound, because now 33, some will spill over, but it should be anywhere 32, 32, something like that. But if more capex will bring, more production comes, we will be happier to spend more. I'm talking about ENP capex. Non-ENP capex is separate, because now 1/3 ENP capex goes in non-ENP side. We are not going in that ratio, but this we talked about ENP capex.
Sure. So ballpark basically 33 ENP and then another 10, 11 non-ENP.
Yeah, if the good opportunity comes, then you can take it, because we have Currently, no plan, but if some new business opportunity comes, we'll invest there 8 to 10.
And what can you provide a KG-D6 oil and gas run rate right now? Sorry, KG-98 to oil and gas run rate.
So how much is? You have numbers? 19/2. 19/2 production. So अभी तो कितना?
Yeah. Currently it is 2.3 in the offshore. Based on offshore.
So 2.3 gas.
And once we open the well, it will be 4
or 5.
Yeah.
But it could be. He's asking about the current production. So 2.3 gas and around 25. 24,000 oil. Yeah.
So I see that both have actually then dropped quite substantially from where we were earlier in the year.
No, in fact, we had, I told you that we had surprises. In fact, it is compartments, but we have got a solution now in hand. So we have to implement it. So it should be back because the reservoir proved to be different from what we thought.
So what is the run rate you're targeting now?
It should come back to same level, but it will take around a year or so minimum because we have to drill some wells.
Thank you, sir.
Next.
The next question comes from Raj Gandhi from SBI Mutual Funds. Please go ahead.
Hi, thanks for taking the question. Sir, just again trying to get some headway on the capex side. Let's say, as you mentioned, you drilled 500 wells, out of which 100 was exploratory. So what should be that annual run rate next 2-3 years, given the impetus on exploration that we are trying?
It depends on what government support comes.
Okay. But outside of deep water, how should we think about it? Maybe deep water is contingent on that.
Outside of deep water will continue to be today. Today, see, roughly we last year we drilled how many? 8 wells? 7 deep water? 8 wells. So, no, 8 wells.
Deep water, 4 wells.
4 wells. But deep water, 1 well is equal to 100 wells of onshore.
Right.
I hope you got my tip.
Got it. So where we are coming from is largely, but let's say if we were to see Oil India, they were at 4,000 crore run rate sometime back. Last 2-3 years they have increased and now they are guiding at about a 10,000 crore run rate. So from an overall capex perspective, we have seen about a 2.5x increase purely on the standalone oil and gas side. So which is
on our side. No, I'm sorry for cutting you short because we can't afford it. We can't 30,000 crore. We can't make it 75,000 crore. Oil India possibly can afford it. I won't comment on that.
Sure. So, which is where we are trying to guess that, where will ONGC end up with on a run rate basis, given the impetus on exploration. So
ONGC's own budget remains almost, 31, 32. Okay, depending on if external support comes, then that much extra we'll do. Internal support say we'll do around, capex will be around 31,000.
Okay.
Thank you, sir. The next question comes from Vikas Jain from CLSA India. Please go ahead.
Morning, sir. Thanks for taking my questions. I have a few of them. Firstly, on dry well write-offs, this was possibly your biggest quarterly write-off. Are there elements of one or two really large wells and, in terms of your overall exploration spend of the 33,000 crore, how is that likely to be in FY27 versus how it was in FY26? Exploration.
So our exploration spend is typically 8 to 10,000 crore, correct, per year. And I told you that is likely to, just one sec. So one answer is that we'll keep at same level, but this year, in your last quarter write-off, it is not. This abnormality has come from a very, very paper process, because we had a write-off, we had a block, and which government took it away, and where we had DSF 4. So we had drilled some well, and since we did not develop because there were commerciality issue, so government took it back. So in fact we had to write it off because the asset itself went off. So therefore we had no choice but to. That was around 1,500 crore. 1,800 crore. So our normal whatever was there is normal. This one exceptional item came. I'm not saying exceptional item in true sense. One-off item came.
Not normal case.
Otherwise, you can be rest assured that you are in safe hands.
Of course, sir. I fully appreciate the challenges that and uncertainty that exploration brings in and E&P brings in. But nonetheless, with our best understanding and best guesses, from whatever you've said, just to kind of build on to that, you said by September, October, all wells of Daman project will open up. And then soon after is when we will get to peak production. Should we take that as by December is a good guess on when you should get to about, what is the peak production? 5 MMSCMD, right?
No. Peak production typically is 1 year away. 2 year away. Correct? Minimum 2 year away, because the reservoir takes time to mature because the flow and all that. So typically different fields have different timelines, but definitely you can expect that good quantity will start flowing by then.
Okay. So I mean,
but peak will be still away. But peak to average will be how much? That is geologists and the reservoir guys to answer.
The peak production is still more a 2027 story, or 28, is it? 27 for Daman.
27 you can take it, but peak is again a statistical number. 0.08 changing is also peak changing. So peak is when peak will come. It is normally a oil field has a gas field has a 15-year profile. Suppose it has.
Of course.
So third, fourth year it will peak, then remain plateau for 7-8 years, and then will decline. So this is a typical growth death cycle of a well.
And the expected peak here is about 5 MMSCMD. Is that roughly the number that we are looking at?
Roughly. Because this project has some additional facility, which creates more production from existing wells, other project wells too, because of the suction that it creates. Well, this is a purely technical issue. So, but you can from this project you can expect 4.89 to be precise.
Thank you, sir.
Okay.
The next question comes from Gagan Dixit from Elara Securities. Please go ahead.
Thanks for taking my question, and also thanks for giving the very elaborate description about the recent developments in the ONGC. So my question is about the capex outlook, sir. Now, sir, given the government is giving lots of incentives to the upstream companies, so do we see the possibility that at least the exploration capex will meaningfully increase in few years, because that's the expectation I see from the government side? Why I'm asking, because I think 2 months back some news came in the media that ONGC closed that $20 billion global tender for the deep water rigs at least for the 4 to 5 years. So that's what, if you can throw some highlight about this capex trajectory or changing that over the next few years, sir.
Okay. So first of all, it never said 20 rigs over what period of time. So it can be 20 years, one rig each year. Okay. So second, I don't know from where they picked up that news, but I will not comment on that. But I can certainly comment on 2-3 facts. That for next 2 years, we have to drill around 16, 4 plus 8, 12 plus 3. 15, 16 water wells. So I can give you 2-3 year visibility, and those those will be drilled from our conventional budget that every year we have been spending. Most likely, big money from government will start flowing from 27, 28. 26, 27, I don't see any, big spending coming on government head because, we have to, you must have seen government has already started picking up the bill because government has already, you see that has floated tender. One is for entire eastern offshore 2D survey, which is also going to be thousands and thousands of crores. And second one is, yesterday it came with 3D seismic reprocessing. So government has already started picking up seismic. And well will not come this year, this I'm sure, because seismic will take some time. And based on seismic result only, government will decide what to assist, how much to give in which well. So I'm sure that policy, let government documents come out. Government is not yet official. All government is official about is they have floated 2 tenders from their kitty, from their office for seismic of big areas. So right now this year we will fund from our own budget, which is a conventional our exploration budget because we have provided for and we have been providing for years together.
And sir, my second question is about beyond this Mumbai High KG Daman. So in this financial year, what are the prospects where you are working? Where you see the potential or at least see some possibility of some exploration results which needs to be awaited. Where do you see the very high possibility based on your seismic studies and you are working on the drilling block?
So basically, you know that we have 2/3, 1/3 there also. ONGC 2/3 is, in ONGC E&P 2/3 is offshore and 1/3 is onshore, production wise. So in fact, some numbers will come from Gujarat, because Gujarat roughly we produce 4.5 million tons. And some efforts are on for, some, because every year we explore and some new wells are found, so that will get produced. Or also enhanced oil recovery of Gujarat assets are very high because we expect there, but these are all, we can't quantify it unfortunately, that how much and all that. And but definitely we will do everything possible to increase production, but how much and all that we can't say. But 2 things I'll just reiterate, that we have great hopes from some of the, particularly after this one last year discoveries, that we'll try to develop as fast as possible.
And so my final question is about how much is the exploratory rigs that expected to be deployed this year as compared to the last year, especially in the offshore?
So that question is very dangerous for us, because what happens the moment we answer, cartelization happens.
Okay.
I hope you should not ask this question, because when supplier side gets all the information and then we end up paying more, and that certainly you would not like, because you are taking good share in your profit. So please do not encourage this number of rigs and all that. We play the card to suit the market. So we can't play off the market by disclosing our numbers. So in fact, but one thing I can share you, ONGC is the first company in the world whose tenders say now that minimum 1 rig, maximum we will decide depending on price. I think whether you have seen this pattern or not, last 3 tenders of rigs is mentioning this language. So we are also becoming unpredictable, like our reservoirs. And like this. You got my answer or no, gentlemen? So what I'm trying to say, we will decide the rig depending on what price it gets quoted for. Because after all, we are taking our budget.
Thank you, sir.
Just
Next.
Yeah.
The The next question comes from Probal Sen from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. I hope I'm audible.
Yes,
Yes, sir.
Sir, my first question was most regarding OPaL. You mentioned that, you're obviously on the way to contract and manufacture the two BLEC. Can we get a little bit of granularity in terms of how much will the cost move once we actually start importing it? I mean, what I mean to ask is that if today, let's say LNG...
I'll answer you. You'll get your answer very quickly.
Right.
In fact, imported ethane is $9 even today. Okay, because $3 is Henry Hub, 1.15 you multiply, and then you have liquefaction and transportation. So typically in $9 you are home. Against that, today we are buying LNG from open market at $18 and new well gas at if OPaL was allowed to buy at $14. Today this month new well gas is 13.91. So you got your answer in this figure?
Right, sir. If I can ask a small follow-up, then what are the timelines we are looking at where we can sort of get the project going? And
our ship will be here in 28. So naturally, the moment we have ship, then we have import will start. The ethane quantity is not a problem in US. The only thing ship is not there. The ship Samsung is ordered on Samsung. Samsung delivery is December. December 28 is the delivery. So December end May that ship will come.
Got it. So
28.
FY29. FY29
yes.
is you can sort of start
to
some
exactly.
And the second question, if I may, sorry, sir. May I ask another question?
Please go ahead. Yeah, please.
The other question was with respect to the Western Offshore and the entire TSP. If I can try to understand what was the decline rate for that entire region, even the range, before the TSP, and what do you sort of expect it to be, let's say, by FY28, when you said that at least 1 to 2 years of work is required for meaningful results to start, coming through. So now that the entire Western Offshore has been handed to, or it's going to be worked on by BP, by FY28, 29, given that it is 60% of oil and 70% of gas, can we see a meaningful arresting of the entire decline rate for ONGC? Is that a fair way to look at it?
Yes. Answer is decline rate, not decline rate arrest and further growth. That is the commitment from next year.
Got it.
Okay. That is the commitment in the tender itself. The decline stops compared to the last year base and growth happens. We have been struggling with the decline for last 90. I'll give you some number which will be of interest to you. And our ONGC peak production was in 95-96 in Western Offshore, which was 39 mmTOE, oil plus gas. Last year, we have produced 26.18. It means roughly 1/3 of volume declined in the intervening period of 30 years. Okay. Now, this is likely to go up from next year. Okay, with peak on 31-32. I hope I clarified.
Thank you, sir. The next question comes from Vikas Jain from CLSA India. Please go ahead.
Let me just ask, sir, the questions quickly so that, we are not cut off, because these are some very important questions. Firstly is, we were talking about Daman itself. So your 3 MMSCMD additional that you asked for that you suggested in new well gas going from 9 to 12. Should I assume that this is largely what Daman should possibly come, although it will peak next year, but the 3 MMSCMD roughly is what you hope will come.
Yes.
From Daman.
Minimum 3. Minimum 3.
Yeah, minimum 3 will come.
Minimum 3. Yeah.
Sure.
Yeah.
And the on KG basin, just to kind of, I know there's a lot of language, the one that was there in press release, something that you've kind of put in as well, just to kind of understand that in a more clear way. The geological challenges that you faced or the surprise that you encountered was largely linked to the oil part or the liquid part of the production. The gas bit has just not started because of the production, the delay in the platform.
Exactly.
So the oil part is where you are going to handle that, and you've kind of figured out a solution. You'll have to possibly drill more wells, and maybe in about 3-4 quarters, you expect oil production to again go back to the kind of expected levels which it was. But the gas bit is only going to pick up from after July, August. Is that understanding correct?
Yes, 100%. You are absolutely right.
Sure. And so the current gas production, which is at 2.3 MMSCMD, that once more wells are added, wells are added in July, August, how should I expect that to kind of ramp up? Should I expect that by the end of this calendar, this will go to 5 or so, or even higher? And then when should I expect?
So having experienced, 98/2 is predictability is low. But definitely it can vary anywhere to anywhere. But I'm saying minimum to max. So that number, I will leave it to you to guess. But definitely it will be at least the minimum size also should be handsome for you.
Okay. So minimum
numbers, no boss.
Thank
Because
you, sir.
last time we gave you a number and then you're all, exact number and all that. But you have to, because exact number we can't give, but we have some view, but, geology is geology. God has created geology, man has not created. So we'll have to wait for the July, August to see.
Thank you, sir. The next question comes from Shabri Hazarika from MK Global. Please go ahead.
Yeah, good afternoon. 2 questions. Firstly, in terms of your production uptick, so possibly Daman and KG 98/2 gas, so both of them will probably add up this year, and DSF 2 from next year onwards. So against that, what could be the natural decline for the existing assets?
So yes, what you said is correct. This year, basically 3 major thing. What is DSF is next year, but 98/2 gas this year and this year. You are right. And plus you should also 1 or 2 MMSCM gas. There are multiple projects going on. So those we are not with those we don't count because that's not counted in what we have explained to you.
Right. So, but this is against a natural decline of 7 to 8%. Is that right?
More or less, yes. Because our natural decline is 7 to 8, but we compensate 3 to 4% by interventions. So 2 to 3%. That number I gave you that says it all. Because in almost 95 to 25 in 30 years, we lost 1/3. So you can derive your own inference that how much we lose. Roughly 1 or 2% every year we lose. After setting off all the efforts of 7 to 8% natural decline, 5 to 6% we make up by all the means, and then 1 or 2% further falls, unless new field comes in. And new field came like DUDP is a new field, DSF is a new field. Next year will be a bigger field than this. So these all fields will add. But old fields with old interventions, with all the conventional interventions, it is very difficult to hold on to even the current level. So naturally, ONGC is one of the, I should say that, we are basically 7 to 8% decline is always kept at 1 to 2%. and that is something ONGC should be proud of.
Got it. And second question is on this Q4 results. So C2, C3, C4 production as well as realizations earnings that has fallen significantly. Was there anything exceptional during Q4?
So you know the reason?
Because of
Because
the
because of the three reasons. In fact, because of this March we took a heavy, because every allocation got diverted towards something else. So naturally VAP got reduced because the gas got diverted for making more and more LPG. And LPG prices are lower than crude. Opal operated only at 60% in March. 60? Less than 60?
Yeah,
Less than 60% in March.
So this will continue in Q1 also till the time that entire allocation thing gets normalized. Is that right?
Opal is now working at what level?
Right now 60, but we are planning to start the operations by this month.
Right now at 60, but I'm told that will be at 80-85 within 4-5 days because something has been lined up.
And even the standalone C2, C3, C4 will recover, or that will remain at the Q4 levels only, or March level? Yeah, both the things are completely connected. That the entire C2, C3, C4 reported in the standalone business goes to Opal only.
We are not running the gaseous feed. We are not running on gaseous feed as of now.
No, he's not. He's asking about the VAP of
ONGC.
So some quantity got diverted because for LPG.
That we do not know.
That we do not know till the West Asia crisis is over.
Okay, fair enough. Got it. Thank you so much, and all the best.
Next question comes from Vikas Jain. Please go ahead.
Sorry, I keep getting pushed out. The one thing that you missed.
You chose to. You get pushed out, or you chose to get some other call, and therefore many times we also do this.
No, sir. The operator shut me out. So
Okay.
Brazil there's some update there as well in the Sergipe-Alagoas thing. So could you please share that bit as well? And also on this.
So yes. Now I'll ask MD OVL to explain. Let him explain.
What is the question?
Sergipe-Alagoas. What is the?
Yeah. BMC4, as we call it, it's in Sergipe-Alagoas basin. We had exploration success some time back, and now FID has been taken, FPSO has been contracted, and we are going ahead with the development. So we should get 1.3 million ton net to OVL additional production by 2030. 30 and 31. First oil and then gas. First oil in 30 and gas in 31.
1.3 million ton oil equivalent, you said, is the net share. That's for the 25%.
Per annum.
Yeah, that's the 25% for you, right?
Yes, please.
Okay. And sir, DSF, that you said could add another 4-5 MMSCMD to gas production, and that be free pricing. So that's roughly when are you expecting that? Is it 2020? Is it FY28 or?
Yes. FY28, but it can't get delayed further. It is got delayed because different reason, but definitely 28, yes. Before that. So I'm saying
this ramp up is likely to be quicker because this is less complicated, geologically. Is that?
It is. It is a known field. See, onshore, western offshore is is many. Offshore. So it is less, is more predictable.
Sure. Yeah, that's what I meant. Okay, sir. Thank you.
Thank you, sir.
Done with all that.
The next question comes from Nitin. Please go ahead.
Hi, sir. Thanks for the opportunity again. Just a bookkeeping one from my end this time. So our operating expenses are higher in this quarter and also for the year. You did mention the GST bit, but are there any one-offs in this quarter particularly? I mean, as against our regular run rate of about 5,500 to 6,000 crores, we are at almost 9,000 crores of operating expense.
Operating bill. Come from this side. Same mic. Sir, for Q4, the GST on royalty, which already DHR additional charge, DF has already explained, that is around 235 crores and 262 crores relating to KG 98/2 umbilical written off. As per the opinion of ICAI, we have to make the provision for old outstanding recoverable also 257 crores and one provision for stores and spares around 280 crores. These are the exceptional items, one-off items which resulted in Q4 operating expenses higher.
So if all this is added up, it's just about 1,000 odd crores. I mean, but we are at, as I said, I mean, last quarter operating expenses were 6,500. Now we are at 9,200. So is there anything else that we are missing over here?
Other thing is the GST impact, as Chairman Sir has already told, from 12% to 18% it has increased. And other thing is exchange rate fluctuation, which rupee depreciated by 11%. So that is also impacted the OpEx expense.
Great, sir. Thanks a lot. And lastly, before I let you all go, if you can give us a regional breakup of your capex spend, if that's possible, how much are we going to spend onshore and how much offshore, specifically in Western offshore, and how much of this, you've given out the exploratory number, how much of this would be in development and IOR, EOR program, the 32,000 crore we spoke about?
70-30. 70-30 is offshore-onshore ratio.
Okay. Any number you can give me, sir, for Western offshore?
Largely 70% you can say that it is Western offshore only, because we have hardly one or two wells, maximum 2-3 wells in 98/2. So most of the money will go to Western offshore only, because Western offshore is still a more remunerative and productive.
Sure, sir. Thank you so much, sir.
Next question comes from Mayank Maheshwari from Morgan Stanley. Please go ahead.
Hello, sir. Thanks for the call. I was just focusing on the cost side. You had a great reserve replacement ratio this year as well. Now, in terms of cost structure, if I was to kind of think about, you've been highlighting of how you're focusing on reducing operating costs specifically and capex costs. In a dollar per BOE basis, can you just give us a sense of what was the region of, in terms of cost saving initiatives that helped you in fiscal 26, and what are you thinking for fiscal 27? And specifically with the BP tie-up, is there any cost savings that we should be thinking about?
So we had a 5,000 crore plan first phase. Then we have another 5,000 crore. We'll have to convert into the per barrel. So about 500 million for 40 million tons. So 500 million for 40 million tons. 40 million tons. So 40 million tons per how much is it? 40 million ton, 10 per ton. Right, no?
$1.8 per BOE roughly.
Yeah.
If I may add, many of the questions that you have been asking, all of you have been asking are pertinent, and Rajarshi Gupta, MD OVL, just but because I'm seeing the international part, when you look at the Indian part and we track all this in rupees, there's a discord, because when we see spends and in dollars and these accounts are in rupees, so rupee, there has been a significant depreciation. So these numbers become different when you look at it. So that should be kept in mind.
That's why I was thinking about it more from a dollar per BOE basis rather than rupees or anything of that sort, so that on a per unit production perspective.
We'll have to discount the depreciation, rupee depreciation, no? Because we had from 5,000 crore is in Indian rupee, we had said. So most of it, we have realized almost 4,000 crore, but we got negated by two things. That is dollar exchange rate and and GST. GST 12 became 18. But we are on course, but we will continue to do. We have another 5,000 crore lined up. So it will take around a year or so more to realize, because the effort you make today, result will come later. So the cost side, we are now very comfortable.
That's right, sir.
Yeah.
Thank you, sir.
Yes. Yeah.
That would be the last question for the day. Now I hand over the floor to Shri Yogesh Naik for closing comments.
Good afternoon. We hope we have answered all the queries from the participants. In case if any further queries are there, they can reach out to our investor relationship cell. I thank Chairman and CEO for addressing the participants and answering all the queries of the participants. I also thank MD OVL, DF OVL, DHR and additional charge finance, ONGC, and all my senior colleagues for participating, and also all the participants for participating this conversation. Thank you.
Thank you. Thank you. Have a great day. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsaba's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.